Something really interesting is happening in the world of corporate finance. We're seeing some of the world's most forward-thinking companies take billions of dollars in cash, their rainy day fund, and swap it for Bitcoin. Today, we're going to break down this high-stakes new playbook.
So what's really driving this? I mean, is this just a wild gamble with shareholder money? Or is it a seriously calculated move for the new digital age we're living in? Let's dig in and unpack what's going on here.
And believe me, this isn't just a small experiment. By late 2023, corporations already held a whopping 6% of all the Bitcoin in existence. I mean, that is a huge chunk of the pie, and it really shows you just how seriously the corporate world is taking this digital asset. Yeah, this isn't just one or two flashy tech companies dabbling. We're talking about a deliberate strategy that over 180 companies have adopted. And get this, in some cases, they're buying up Bitcoin even faster than the big ETFs. So you have to ask, why do it? What problem does Bitcoin solve that just holding good old-fashioned cash doesn't? Well, it really comes down to a few fundamental arguments. At its core, the argument is pretty simple. On one hand, you've got government-issued currency, right? They can print more of it whenever they want, which means your money can lose value over time. But on the other hand, you have Bitcoin, with a hard-coded absolute limit of 21 million coins. That's it. And that built-in scarcity is exactly what companies are looking at as a powerful shield against inflation.
And that hedge against inflation, that's just one piece of the puzzle. Companies are also interested in Bitcoin for diversification because its price doesn't always go up or down with the stock market. It also gives them a bit of freedom from the traditional banking system. And of course, the potential for some pretty significant long-term growth.
Okay, but let's be real here. This strategy is not all upside, not by a long shot. Jumping into Bitcoin brings a whole new set of challenges and complexities that corporate finance teams have to navigate very, very carefully. And the biggest, most obvious risk? Volatility. I mean, just look at this. Between 2024 and 2025, Bitcoin shot up from under $50,000 to over $111,000, only to then drop by 28%. Those are massive swings that can have a very real and very jarring impact on a company's bottom line. And then you've got the accounting rules, which are a whole other headache. In the US, Bitcoin is treated as an intangible asset. What does that mean? Well, it means if its value drops, you have to report that loss. But if the value skyrockets, nope. You can't recognize that gain on your books until you actually sell. It kind of creates a skewed funhouse mirror version of your financials for investors. Beyond the wild price swings and the accounting headaches, there are other major hurdles. Think about it. How do you securely store millions or even billions of dollars in a digital asset? That's the whole custody question. And then there's the regulatory maze of KYC and AML, that's Know Your Customer and anti-money laundering rules, which every single company has to follow, no exceptions. So with all those risks, how does a company actually do this the smart way? Well, it all starts with a solid, well-thought-out strategy, one that's built long before a single dollar ever gets converted into Bitcoin. First things first, you have to be conservative. Most companies are not betting the farm here. A typical starting allocation is usually just 5 to 10% of their total cash reserves. This approach lets them get a taste of the potential upside while making sure a big price drop won't jeopardize the whole company. A really smart strategy tends to follow 4 key steps. 1, you've got to have crystal clear goals for why you're holding Bitcoin. 2, set very strict limits on how much you'll buy and actually stick to them. 3, you need to constantly stress test your holdings to see what would happen in a major crash. And finally, 4, have a clear plan for rebalancing your portfolio as things change. This quote from Block's CFO just perfectly captures the right mindset. This isn't about getting rich quick. It's about learning and participating in a disciplined way. It really shows a long-term vision for how digital assets might just reshape the future of finance. Okay, so the strategy is set. Now for the really practical part. How do you actually do it? What are the nuts and bolts of adding Bitcoin to your balance sheet and managing it day to day?
Now, this is probably the single biggest operational decision a company has to make. Do you hold the keys yourself? That's called self-custody, which gives you total control but also total responsibility. Or do you trust a third-party company to hold it for you, which is easier but introduces a different kind of risk?
The trade-off is pretty clear, right? With self-custody, you are in complete control.
but you're also on the hook for all of the security. With a third party, you're outsourcing that huge responsibility, but you're also introducing what's called counterparty risk, basically the risk that your custodian could fail. It's a huge decision with no single right answer.
So, the operational checklist pretty much covers these key actions. First, buying Bitcoin from a safe, compliant source. Second, setting up that secure custody solution we just talked about. Third, maybe even integrating Bitcoin for payments. And finally, setting up clear, transparent reporting so all your investors and stakeholders know what's going on.
And on that reporting front, there's actually some really good news. The Financial Accounting Standards Board, the FASB, has updated its rules. Companies can now report their crypto holdings at fair market value. This gets rid of that old, confusing system and gives investors a much clearer, more accurate picture of what a company's holdings are actually worth. And that brings us all the way back to the big question. After looking at the reasons why, the massive risks, and the playbook for doing it right, what do you think? Is putting Bitcoin on the corporate balance sheet a genuinely forward-thinking strategy for our new digital world, or is it just an incredibly risky corporate gamble? The debate? Well, it's far from over.